Well, I'm here as we should be. This is Wednesday, so therefore it is Jeff Lutz. I called you Metz earlier today on screen. I don't know why I'm having this trouble between Lutz and Metz.
I've been called worse, so that's not too bad.
It's okay. So, Jeff, I just spent, in fact, that was when I did it. I was on this conversation with Scott Walter for an hour, and we were talking about the week. I threw out this proposition that this might be the week the world changed in a really major way. One way you could put it maybe would be we've just ended the digital age and we're starting the robotic age. I don't know, something like that. You have been. I heard that you watched the keynote speech, and of course, I'm sure you looked at the Neuralink demonstration just a little while ago here. What a week. What have you been thinking about while all this stuff's been going on?
Yeah, it looks like we're approaching, superhuman intelligence at a pretty rapid pace and artificial superhuman intelligence. Um, and and there's a lot of concern with the pace that it's coming at, but also like how we're going to approach it. Like what are the implicit biases of these systems as they come up, and how do we deal with it? And this is something that I've definitely spent a lot of time thinking through and working on in some respects. And I think it was a big week. I think NVIDIA, told us what they're going to launch, which wasn't too much of a surprise.
Right.
I think the specs were mostly in line. They're amazing. I mean, there's really nobody that's got um, not only that you think of the chip, but you also think of the system that they wrap around the chip to give you that full end-to-end performance. I think Jensen likes to say he's selling platforms and he's working with companies on full platforms, not just giving them a chip and then they put their own platform around it. And yeah, I think that's what makes NVIDIA very special. It also makes them very difficult to replace because you'd have to replace it with another company that's capable of doing the entire platform, all the switching, all the timing, everything, and into that chip and the software piece of it and the collective wisdom they have of working with all those partners in every aspect that they're in. It's not all rosy though. I would say though that when you have a company with the technical capability and leadership of Tesla, and you look at their approach to designing their own inference chip and getting NVIDIA out of the car, getting it out of the client side,
Right.
and then their attempt with Dojo, which right now they're using NVIDIA hardware with, but it's their training infrastructure. It's run on Tesla's network. It's not run on NVIDIA's network. And where these other car companies are going to depend on NVIDIA to host and run a lot of these processes and run the training. Um, I think there could be a viable alternative with what Tesla's doing because Tesla, does not need the full GPU in the car, and I think they know what they need on the training side to get them from point A to point B, both on vehicles and on the robot. I'm not sure every other auto company is equipped the same way that Tesla is. Um, so yeah, I think very powerful message, very powerful keynote. First time you see a tech CEO giving a keynote in a hockey stadium. It's sold out. It's over 11,000 people in the available seating that they had. And yeah, it's the start of, I would say, a new era of massively accelerated compute. And when you say acceleration, it's not only speed, but it's also the cost structure and power consumption required
Oh.
to give you that output. And they're solving for all three on those vectors. So I think it's putting us at a very special place at this point in time.
Yeah, and of course they talked about this interface, the NIMS, and then the people that'll come in on top of the NIMS. At least the way I understood it, and I am the last person that you want to ask about computer science, but it sounded to me like we would have these NIMS systems, and then there would be some of those 11,000 people in that stadium were there because they want to become developers that will provide some of this connection, if you will, between the NIMS and average citizens like me. Is that did I get that right? Is that kind of what you saw?
A little bit. I think what NVIDIA is trying to do is again they're trying to host an entire platform, and if you don't have the scale as your company to be buying $40,000 GPUs, they are going to, they want to be kind of like like TSMC builds the silicon for most of these high-end
Right.
compute
Mhm.
companies. They want to be the TSMC of network infrastructures. They actually want to host. They'll rent you, or they'll lease the GPUs to you in this um, AI as a service that they want to offer. So I think that was the other big announcement. I think that's going to get to a lot of the smaller companies that don't have, hundreds of millions of dollars to buy all these GPUs, but they need training jobs done. They want to accelerate the work that they're doing. They want to transform the work that they're doing. So I would kind of classify it as kind of like they have Blackwell and they have the full system offering. They're going to have to ramp to that. And they still have the existing solution today, which is kind of really unmatched. And then they're going to have Blackwell come out and they're going to have to ramp that in the latter half of the year. And they will have capacity. They're bringing more and more capacity online to serve all the big customers. And then they're now going to have this kind of AI service as an offering for some of the smaller companies. But when they announced Hopper, which was a prior series to Blackwell, and you saw that those list of all the partners behind Jensen, I think there were like 50 on the list.
Right.
When they announced Hopper, there was only like two or three
Oh,
partners at the point of launch. So they've gone from, and that's why they've gone from, announcing in some, little auditorium to, take to leasing an NHL hockey stadium to do an announcement. Now they've got 50 partners at launch. So it really shows you how their business has scaled up. And I think what it means for average people, like, is that there are going to be things that we do that where we don't necessarily have to go to the Microsofts and Googles of the world. There will be other companies that bring up their own app infrastructure that if they need to do training, if they need to do something that does some sort of accelerated compute, they will have access as well, which hasn't been the case before.
yeah. Now, another thing Jensen said was that this is the year of the robot.
Yeah.
And I think it was not him. Was it? It might have been. So also a quote this week was that everything that moves. I think it might have been Jensen that said everything that moves will be a bot. And so I gave the example, I think, in my show this early this morning after the bell of I saw an ad for a lawn trimmer that is now a bot. Now I don't know if it's got any AI capabilities, but that a lawn trimmer is a bot. So that anything that moves will be a bot. And then and then I guess I was thinking about Sam Altman talking about the fact that of what he's working on, that maybe everything that doesn't move will also be having some artificial intelligence as well.
Yeah. It's kind of like this, this phase that everything went to where everything was being turned on and connected to the internet,
Right.
like your washing machine, your toaster, and things that weren't your refrigerator, things that weren't typically connected to the internet are now being connected to the internet. And some of that stuff was helpful and some of it wasn't.
Right.
But now you're talking about connecting to the internet and actually, um, and instead of it just being low level tasks or even low level machine learning, which is kind of like how your
Right.
your iRobot works today, really having AI driven robots that can actually learn. Because I don't know about you, but if you have one of these vacuuming robots, they don't work very well.
Oh,
And um, and so yeah, we're going to need something that can be fundamentally, trained and it can get better over time. And we're going to take things that didn't have any intelligence or any connectivity. We're going to give it connectivity. We're going to give it intelligence, and hopefully we can get meaningful output from it. And yeah, it's coming.
so I sure thought of you when he was talking about the smart factory where
Yeah,
you would talk to the factory. Of course, I
yeah,
thought also about Elon and the fact that I feel like he's been doing that all along, although you may not have literally talked to the factory and setting up all those digital twins. That was kind of a familiar phrase also,
yeah.
but digital twins in terms of all the robotics and the things in the factory. What did you think about all that from your perspective?
Yeah, this could be. a couple hours show because I have spent a lot of time over the last 5 to 10 years doing machine learning and kind of small rudimentary AI tasks in the factory, things that can make the factory smarter. For example, if you're assembling something that has screws, wires, and flexes in it, and uh, there's going to be a very high sensitivity to how those screws are torqued, especially if it's an RF device. Um, there's going to be very high sensitivity to its functional performance and its reliability based on how it was built. So if you could capture imagery throughout the whole manufacturing process of not only of like the resultant state of everything and what turn is on that screw and how that wire is routed and how that flex is routed, flexible circuits routed, but actually how it got to the point it is, you could actually learn a lot. And then you can actually start tying the variation of how the product was assembled to how it performs in functional test. And then you can work on automation that reduces or eliminates that variation and improves your performance in test. So there's a lot of opportunities to really use AI. And the fact people think that AI is like, okay, looking at materials and looking at consumption and figuring out how to order more material. Yep, that's needed as well. There's been a lot of that's been oops, in in use for a while. But where I think humanoids and just in using AI in the factory are going to be very helpful is eliminating defects and phase containing defects before they eliminating defects before they happen or phase containing them where they're created. And that could be very powerful to the value added cost to build any kind of microelectronics device anywhere in the world. And then, so once you figure out these kind of AI based solutions, then now you have to figure out like how can you miniaturize them? How could you make them very easy to install? How could you make them very low cost, very easy to connect to the cloud? And I think that's the challenge that's coming because the tools I've worked on were homegrown, crude, and internal and kind of one off. So now I think you're going to have companies like Tesla that have very advanced manufacturing capability that are going to want to develop their own tools, that are going to want to leverage their own dojo for even for manufacturing. But then you're going to have most of the companies that are going to want to use NVIDIA's AI service, or they're going to want to use, or they may want to buy their own GPUs, but they're going to want to, use an external partner to work on some of this stuff. So yeah, a lot of changes could be coming to manufacturing. The digital twin piece is useful in a number of areas. One is simulating the construction of a factory and the flows of material and where how wide are the aisles and where machines are and how do you reduce the process time based on where you put the machines.
Yes.
So ultimately what you want to do is you want to have material come in and product come out and you want the fastest process time, the least number of touches and the least number of defects in that whole process. And so that's the digital twin process, and that's Wistron, and you see Foxconn were two of the partners on that list, and you'll see them. They're contract manufacturers, and you'll see them using those tools and other companies. And then the other thing for digital twins are just doing daily inventory. Like, what if you had a robot that could roam the aisles of Home Depot and look up and look down and measure not only the quantity of inventory, but also is product in the right place and where it should be? And if it's not in the right place, could an arm come out, pick it up, and bring it to the right place? Because right now there's a human body that does that. So there's a lot of uses for digital twins and AI in manufacturing.
Yeah. So I think, of course, I'm always thinking about the little guy. I'm always thinking about my factory, with 100 employees, or the, slightly bigger factory with 200 or 500, or the wholesale distributor that's got 50. That those companies are the ones that can't afford to do this stuff unless there is a package.
Yeah.
And that's what it kind of sounded to me.
Yeah.
Like what he wants to do is he wants to provide those packages so that, I can remember when ERP came out and, it was the hardest thing I'd ever did in my entire career, harder than law school.
It was too difficult to roll.
It was too difficult. But if somebody come in with a better, more of a dumbed down package that I would have, that my level of company could have done, it would have been so much easier. I mean, we accomplished it and it was very valuable, but it was really hard. So I see the same thing happening here where, yeah, all the things you just talked about, the big companies are like on it right now, but the smaller companies, you know, they are looking for the guy that's going to come in and help them install it for 20,000 or 10,000 that's going to give them some kind of value.
Yeah. Yeah. And that's how these tools work over time. There needs to be a process to miniaturize them, to make them quicker to install, to make them cheaper and more accessible. And so we're at the very early phases of these things. But I can tell you the biggest manufacturers in the world are using optics. They're using inspection, and they're tying that data together to prevent and reduce failure rates. But those are some of the bigger players in the world. Now, how do you take that down a rung and make it more accessible?
Yeah,
Is the challenge.
That's
But it will happen.
Yeah, I think it will, and I think that's part of the part that makes me so excited. What else? What else did you take away from? I mean, we had SpaceX sending sending up Starship. We had the Sam Altman interview with Lex. Did you happen to catch that?
I caught parts of it, and then we had V12 go out as well to
Right.
drivers. Yeah,
How about did
big
you
week.
did you get yours?
No, I have two
I haven't
vehicles, and
got
it's
mine
strange. Yeah,
either. Yeah. Okay, so but you've been watching it. So any thoughts that might be original in your mind?
yeah. Well, in terms of the week, it's been a huge week for tech. The V12. What I will say is, it looks like we're on a path now to make bigger improvements in shorter periods of time, and it looks like we have something that could, now we're on this I think we're on an accelerated path now, and I don't know how long it's going to take. I don't know if it's a couple of months or if it's a year, but it looks like we're on a very accelerated path to solving these problems, and doing that by ramping this training compute up in the background. So the Tesla team can take this variation that they're seeing and then run a proper training model on it to say, like, this is how the behavior should be, and correct it. And so there's still labeling aspects, there's still things happening, but I think we're on this accelerated path now that we haven't been on before with heuristics and coding. So it's a very exciting time. And I think the value of a Tesla, I think the challenge for Tesla's got three barriers that they've got to get through to get this thing moving. One is they have to get the performance of the system, running to a particular level.
Right.
And that is going to take, a couple more releases. They've got to get number one, they got to get the feature complete. Like, there's features that are not in that should be in.
Right.
Number one. Number two, once they're feature complete, they've got to get the bug rate down to a certain level. And we now, with the way that software is being done now, it looks like they're on an accelerated path for that. And they're on an accelerated path to not create new bugs.
Right.
That's the other thing.
Right.
And then the third thing is, how do you get the word out on this? Like, this could be the tree falling in the forest unless Tesla figures out how to get the word out in a meaningful manner.
Yeah.
Because our Twitter bubble is very, very small.
Right.
And I would venture to guess that 99.9% of Americans, just start with Americans because that's where FSD beta is actually released on subscription.
Right.
I would venture to guess that 99.9% have never been in a vehicle that's driven under Tesla FSD beta.
Right. So now that you bring that up, I was kind of thinking about my own experience with my Model Y. When I got it, within a couple of weeks, I went and visited my daughter in and my grandkids, she has 4, and took them out for a ride and tried to show them FSD beta, which it made a couple of really weird errors, and they still remember that day 3 years ago.
Yeah.
Okay.
Yeah.
I haven't tried to take them around in FSD beta since. Now they're all big fans of Tesla because they love the farts and they loved the fireplace, and they love the light show, and they love the look of the car, and they like, all the rest of the stuff was a lot of fun and they like it, and so they're big fans. But I didn't want to take them out and show them FSD beta again since that time. But I can guarantee you, knowing myself as I do, that once this thing really works, I'm going to take them out in it. I'm going to take my neighbor out in it. I'm going to take all the folks at church out in it.
Yeah. Yeah. And that'll have some impact. And maybe we go from, we kept going back and arguing like, what is adoption rate? And there's people that are measuring adoption rate globally. I'm like, well, it's not available globally. It's only available in under subscription in the United States. In Canada, it's available for the full purchase. So you got to look at US data. And the last time they talked about data was the 400K that had downloaded it last January. And there were like 1.7 million capable cars in that area. So that's 23%. So through word of mouth, maybe the 23% can get to 30%. I don't know. But how do we get this thing to 40, 50, 60%? And do you change the payment model? Is it per drive? Is it per mile? Is it, because $199 a month is a lot for most people. $12,000 is a lot for most. It's a third of the Model 3 if you buy it. And it's roughly 25% or so of a Model Y. So it's a lot of money. So I think they need to figure out the economics of it. So I think what will happen is once they get it to this point of where it's super stable and super good, they'll release it to everybody and just say try it
for a month.
But that's still going to be very, very, very low awareness. We want people that don't own Tesla. I agree. We want people that own Teslas to have awareness of it and to try it and then maybe like it and keep it.
Right.
But we really want these people that have never owned or experienced a Tesla to be drawn to the brand and drawn to the company. And so that's going to be the challenge for Tesla.
Right. And hopefully they're doing all the things right now that'll set them up for that when it happens with the social media advertising that they're trying and attempting. I'm hoping that they're going to prove me wrong and they're going to end up being the best company that there ever was at social media advertising and marketing. We'll see what happens on that.
Yeah.
Okay. The other big thing that happened over the course of the last week was that we've seen price increases in the Model Y worldwide. Did you have any thoughts on that taking place?
Yeah. All I'll say is that it's going to be very humbling to a lot of the people that are outside of the business that are trying to predict how the business is actually going. I don't know if it's this quarter or next quarter, but at some point there's going to be a very large error in the people that count cars or look at inventory levels and try to draw conclusions, because really the only people, and from being on the inside of this effort at other companies and trying to see people try to guess things for launch and other things, it's really the only people that know this stuff are the people who are inside the company. So it's one of two things happening. They're either trying to get, a flood of inventory sold at the end of the quarter. And so want to let people know, like, if you don't buy it now, the price is going up. Or, as the IRA has expanded both in its scope and its awareness, people are buying more vehicles. That could be the US story. In Europe, these are very small price increases. That's the other thing. These are small numbers. These aren't, the big numbers that we took down last January and last April of last year. Those were corrections in price. Those were, we have the wrong price versus the point in time we're at. And it looks like our inbound costs have come down a lot. So we need to reset the pricing on our product. So until I see a price correction in the other direction, I'm not going to overreact. So if I see them increase price by $5,000, well, then I think there's a broader story to talk about. Until then, to me, it's these very small moves. And by the way, as I've been fighting this whole concept of like overreacting every time they do $500 or $250 price change, the same thing goes in the other direction. Like, I don't think these are overly meaningful as well.
Gotcha. So the 4680 news, we finally got news on 4680s today, and I guess the run rate is about 6.5 gigawatt hours per year. That may be a little less than I would have hoped for at this point. Maybe I probably would have been extremely excited by 25, but that's a bunch more than 6.5.
Yeah.
What was your takeaway?
Yeah, it's great growth from the prior data point, but it's not enough. We need to be building 1,000 Cybertrucks a week is, we need to be way above that number here soon. And then we need cells for Model Ys too. Like we need to be building, because we get the IRA credit when we build, that whole thing together. And we know the cost structure is going to be lower because we know we're not going to charge ourselves a margin to build batteries and ship them to ourselves. So that number needs to be a lot higher.
Do you have any sense, you've manufactured much more complex products than I have. Do you have any sense at all? I was trying to think the day that there would be maybe three things on their mind. What we've heard from Tesla and from others: quality of the individual unit in terms of not having rejects, chemistry in terms of how the chemistry is working, et cetera, and then third, speed. And that you kind of have to balance those three things as you're ramping up. And you might go faster and faster, but then you've got quality problems and you have to slow down, or you have to change something out or make an adjustment in a piece of equipment. But would you think on these batteries, just maybe you don't know enough to even, maybe I know I don't know enough to speculate. Do you think there's a point at which you got the quality thing kind of licked and you just keep speeding it up and you should be okay?
Yeah, and that's the S curve of the ramp, and they may be jumping onto that soon. One of the problems, one of the challenges that Tesla will have is when you're doing component production like batteries, Tesla likes to with the system assembly of the vehicle, they like to go in and tweak stuff a lot, like every few weeks.
Right.
And that's unique, and that could probably work okay with system assembly. But when you're doing fully automated battery production, this is just an assumption. I'm not sure, but the fact that we went out with we didn't have the energy density that we wanted.
Mm-hmm.
It feels like they've been fighting that and trying to figure that out and how to improve it. And that's how we got from the 4680 cell to the supercell.
Right.
And what's going to come there? I'm sure there's another version after the supercell that they're working on. Tesla's got to figure out how to separate that. And I think they are doing that, but they've got to be able to box out production and say, we got to let 100 million of these cells go with this recipe and leave the line alone. Let the line get the full rated speed, let it get the full rated yield, let it go. I'm speculating, but I'm wondering if they are kind of trying to cut in different things back and forth, and that could be, a bit disruptive. So they are ramping and they are getting faster and they are getting more output, and it's meaningfully more.
Right.
But I wonder if the fact that we're not at the energy density that we wanted to be at, that we continue to try to tweak at it and to try to improve it. And that could be part of the reason we're not at the 25, we're at 6. So
right.
I don't know. I don't know the answer. I'm not on the inside of the operation.
Right.
I know it's a very difficult undertaking what they're doing.
Yeah.
I commend them. And I think this could be part of the reason that Panasonic has been delayed with 4680 as well. Who knows? They're not, they're not delayed for demand, because Tesla, I think, would take as many of these as they possibly could make.
Yeah, probably so. Tesla investors, I'm sure, voted yay today, along with the broader investment community, after the Powell press conference. Of course, I suspect most folks were just glad to hear that there will be three more interest rate, or that probably there will be 3 interest rate cuts and not 2 and not none. And the market went crazy, up about 400 and something points after the conference, and then went up another, I don't know, another 400 or 500, I think, in the after hours or the pre-market. After hour. Anyway, Tesla is obviously a beneficiary if we have rate cuts and interest rate cuts. What did you think about what Chair Powell had to say today?
Yeah, I think for interest rate sensitive companies, the message was he said the rates aren't going to go higher from here. He basically said that. I think there's a bit of relief there. I think he said that they're going to really hold off not hold off. They're going to start tailing off the quantitative tightening, that's going to help with credit. That's going to help with that's going to help a lot. I think the market honestly reacted to that.
Oh, interesting.
And I think the market also liked to hear three cuts, but if you think of three cuts, you think of the Fed funds rate, it's going to be at 4.6 versus 5.25. I don't know if that's fundamentally changing massive purchase decisions one way or another. I think if you get a 150 or 200 basis point cut,
Yeah.
then it starts becoming a lot more meaningful. But I think people just want to get the whole process started, and the fact that there still could be three, and that the Fed didn't freak out from last month's data points for CPI and PPI. I think the market, I think it was a really like appropriate message from the chair, to be honest with you. Um, so I think the market reacted to the fact that he was, composed and not like super overly hawkish. So I think but I think the market, I think it really went up when they said that they're going to be pulling back on quantitative tightening.
Yeah, well, that's an interesting point. I obviously noticed there was like three questions on that very subject. And so
Yeah.
people were very interested in it, but I kind of missed it because I was paying a little more attention to three aspects of the economy that he talked about. And one of those was he says that the economy is going to grow at 2.1%, or they're estimating the economy will grow at 2.1%. I noticed car sales not doing very good in the first quarter. Are you seeing a 2.1 GDP growth this year?
So we just looked at this with Herbert, and it looks like what happened in this is per Cox Automotive. It looks like used inventory is coming down to 44 days. It was up in the 50s and 60s. And it looks like new inventory, all new, this is US only right
Yeah.
now.
Yeah.
All new inventory went from the low 80s now to like the mid 70s. So it looks like what's happening is that seasonably slow January and February came in seasonably slow as expected, but it looks like it's starting to pick up and point in the right direction. I don't think 1 month makes a trend.
Right.
So we'll have to see. But yeah, that's on the auto side. I think people will start getting their tax returns, and maybe that'll help spur the market. We'll have to see how the next couple of months go. But in general, the Fed was reacting to the fact that PCE is still in a downtrend,
Right.
and a pretty steep downtrend. Even though these individual components came in a little bit hot, the Fed knows that their tools don't ultimately impact the price of food and the price of energy
Right.
as much as they impact the price of everything else. So they don't want to freak out and screw up everything else. That's why they focus more on PCE and PCE minus, food and energy.
Right.
And so I think like they didn't overreact to some very steep inflation reductions in the last half of last year, they're also not overreacting to what happened in February, which to me, it wasn't this anywhere near the magnitude of the decline we had in the second half of last year. So I think they're being very calibrated. I think the thing that's going to make the Fed move is ultimately the labor number.
So that was my next question, because we're at 3.9. He said they're expecting it to go maybe to 4.0 this year. It's one of the questions that was asked was, well, we're already at 3.9. Why do you think it's only going to go to 4.0 or 4.1 by the end of the year? And I guess, if we're at 4.0 or 4.1, nobody's going to, get too nervous about that. But Kathy Wood pointed to the fact of how fast that number is going up, and that we're not creating any full-time positions. So do you think there's would that be your greatest concern out of the stuff?
Yeah, it is. And we could be at that end of year projection. We could be there in 10 or 12 days. So
Right.
I
Yes.
think he gave himself an out during the meeting. He said, look, one thing that would get us to to move at a different pace would be as if something happened in the labor market. So I think that's where they have, all eyes on right now. So I think that's ultimately what's going to cause us to move. The JOLTS data was not favorable to the labor market. So the good thing is the Fed has a pretty good handle on this information. The bad thing is you keep seeing these municipalities and states and federally, they keep restating these numbers. January was restated by 35 or 40%. I think I reposted something from California where during a 6-month period, they thought they created 325,000 jobs. It turns out it was 50,000 jobs. So
Yeah. Yeah, that kind of stuff is crazy. So then we've got the oil patch, and the oil has gone up from 67 3 or 4 months ago. Now it's at 82, and we've got Ukraine bombing facilities in Russia, costing them 1% of production right now, and we've got tanker issues possibly in the Red Sea, according to another headline I read today. And basically, oil and gasoline, those two things can bring the whole inflation thing back into front and center.
yeah, and the Fed would know how to separate the two. They should. Yeah, it could. Maybe we should be bombing Ukraine and tell them to stop doing that. I don't know. It's a joke. No, it's more of, yeah, we have to, this Red Sea issue ultimately needs to come to a head, needs to be resolved. It's gone on way too long. And I mean, don't get me started on the Ukraine thing as well. It's a very difficult topic. But yeah, I think the Fed will know though that, what's a special circumstance versus what's structural.
Yeah, yeah. But the special circumstance, if it goes on for a long time, as you just pointed out, all of a sudden
Yeah.
it's in your food, it's in your product costs, it's in everything that's transported. So it's in, and now we've got natural gas starting to move up a little bit as well. So that ends up in your fertilizer, in your plastics. So I thought inflation was behind us. I called that all last year, but now, and I thought that the numbers were wrong in January and February. That's what I've been saying. But now that the oil thing is popping back up there, it has me a little nervous.
Yeah. Yeah. There's these conflicts have gone on for too long. We need to be, I think, a little bit more assertive, especially in the Red Sea.
Yeah, okay. Well, let's take a look at where the markets are, and we'll see what's happened after hours here. I always like to start with the bonds, which are not going to be out until for another minute, so they're still showing unch on everything here. That's what Bradford calls them, is unch.
Yeah.
They'll be changing in a minute. Anyway, we've got the U.S. 10-year though. That for some reason they started showing that early, and it is up 0.6, 0.6% of a basis point. Oh, here they all come now. Okay, so now we've got them all. We've basically got the short ones down and the long ones up. I suppose it's a little profit taking, at least on the long bonds, after going down quite nicely earlier today.
Yeah.
We were talking about the oil patch, and the oil patch is actually unchanged, believe it or not. So that's interesting. But 81.68. So that's pretty much the high point. It was a little over 82 for a minute, but staying right around there in that area. Natural gas up more, $1.70. Not terrible, but certainly not where it was. Any thoughts on any of that? We've already talked about it, but
Yeah, I think, not too much else to add. I would
Okay.
say not my direct area of expertise either. I could see oil. I've looked at some of the charts, and I wouldn't be surprised if it touched 90. We're going to be entering the summer season too.
yeah,
But yeah, so it should be. I don't
gasoline.
think we have some. I don't think we have some issue where it's going back to 130 or 140. But who knows? That would be great for Tesla if it did.
That's true. And we have the dollar dropping, of course, because of the interest rates dropping. So that's no shock there. We've got gold up 43. Holy mackerel. So that's, I don't know. I don't know how to read that. The dollar's down, so gold goes up. That's normal, but 44 points, 2205.
Yeah, we got your favorite metric, Bitcoin, up 10%.
Look at that, up 3,000 today. Yeah, so, but still 67, down from the 72 or 73 where it topped out last week. But as you point out, I just look at it as one more thing that I can see, trends. I don't have any way to judge what those prices are, or why they should be the way they are.
Yeah.
Pre-market on the Dow, okay, it's not as much as it was earlier. So the equities Dow is up 83. The S&P is up 17. NASDAQ is up 106. So that's, for those who like the percentages, that's 0.21 on the Dow, 0.32 on the S&P, and 0.56 on the NASDAQ. And we forgot our best friend over there, Tesla, who after being up $4.34 during the day is up $1.94 in the after hours. So that's pretty darn good.
Yeah. Yeah, we'll see. I mean, there's a lot of, there's a lot of resistance in this 175 area. So let's see if they break through it. There's a lot of people that have been shorting it too. So very dangerous thing to do. But yeah, I mean, we're going into the last week of the quarter. We've got, if you're someone that's short-term focused, there's certainly some headwinds. And I think there's a gap between the market expectations for the quarter and where the quarter is, but let's see, where that comes in.
Yeah, well, that April 2nd report this month, this coming a couple of weeks from now, is certainly going to be an important day.
Yeah.
So Jeff, any last thoughts on what I'm calling the most important week, the week that changed everything and that brings us into the out of the digital age and into the robot age or something? We had to figure out what that new age is going to be called.
Well, if you look at the Musk companies, I think what's great is that you've got leadership there that really understands what's going on in all these areas. And a lot of these CEOs aren't going to be able to figure out how to harness what you call the most important week. And I agree, it's a very important week. And I think I think Tesla and Tesla companies are in a very good spot to really capitalize on these major announcements and really be part of, if not lead. I go back to like the humanoid piece. It's not clear to me that any of those robots on stage are mass manufacturable, or the companies know how to figure out how to make them mass manufacturable. They're trying to figure out how to get a prototype to do very new and interesting things that could get them funding so that maybe they can discover how to build it.
Yeah.
But when you start talking about these build cycles, Tesla's been focused on the design for manufacturability of this bot for basically ever since they built the first bot 2 years. So I think they've got a significant head start. People look at the demos and try to put the demos against each other. But what's happening behind the demos is there a supply chain? Is there an engineering that is scalable, reliable, and can get this thing into the millions and tens of millions? I know one company that knows how to do that, and I'm not sure of the others.
I'm pretty sure the rest of, as you point out, I'm pretty sure none of them do. And in fact, many of them have even talked about the fact that they don't. Figure certainly has said as much, but a bunch of them have indicated that they do not know how to scale yet or how to even begin manufacturing. So that's a great point. I love it. We'll end on that, but we will use that as a segue to say, if you'd like to hear more about the most important week of maybe the new century, Scott and I did that video earlier today, and I'll put a card right here for that one. And Jeff, as always, I appreciate you so much coming on Good News Wednesday, and we certainly had a lot of good news to talk about today. And again, thank you so much.
Thanks, Randy.
Okay, and for all of you out there, it's been great talking to you.